Good evening, everyone. It is a pleasure to welcome all of you to this special session on Integrated Business Solution paper organized by Board of Studies Academic. Let me begin with a simple thought. This paper is not about how much you know, but how well you can connect with what you know. Many students approach IBS with the mindset that it is just extension of subjects they have already studied. In reality, it is a shift in thinking. It demands that you move from being a subject expert to become a decision maker. In the professional world, decisions are rarely isolated. Even strategic moves triggers financial implication, regulatory consequences, and operational issues. IBS is designed to simulate exactly this environment. Let us look at it from a slightly different lens. Suppose a business is operating in a stable or even in a matured environment. This clear instinct is to compete harder. Here, we have to compete harder, reduce prices, increase marketing, capture market share. But real strategic maturity lies in asking a different question, and which is, can profitability be improved without competing harder? This is where choices become very important. You may try to reconfigure your value chain by eliminating inefficiencies or redesign how value is delivered to customer. Sometimes growth doesn't come from expansion. It comes from accuracy, operational efficiency. Now, the moment you take such a decision, the ripple effects begin. If you decide to integrate either backward or forward, suppose you decide to integrate backward, or you decide to expand geographically, it is no longer just a strategy, it becomes a compliance, funding, risk management issue in the question. A cross border investment, for instance, is not merely about cost advantage, it brings in regulatory threshold, approval requirements, and accuracy exposures. Funding decisions are no longer straightforward. They require a view on interest cycles, forex volatility, and risk mitigation tools. This is the essence of IBS, understanding that every decision carries different layers. Another important dimension often overlooked is trade offs. There is no perfect decision, only well balanced is important. Your role is not to find a perfect answer, but to recommend which one is stronger one. Now, let me address a very practical situation. Many students underestimate the importance of set A and set B because they don't appear as core in first glance. However, IBS doesn't differentiate between core and marginal or secondary subjects. It evaluates how you integrate all subjects in a comprehensive and holistic manner. Conceptual clarity is biggest assets here. I always repeat in session, conceptual understanding is must for this paper. The open book is not a shortcut. It supports the examination system. Without clarity, it becomes a difficult. It becomes very difficult. With clarity, it becomes a very powerful tool. Also, I strongly encourage you to treat your preparation in a slightly unconventional way. Instead of limiting yourself on current group, retain selective, detailed, focused knowledge from group 1 subjects also. You may select one or two subjects from group 1. This make your understanding very clear and enhance your ability to analyze the issues in a holistic manner. Another critical aspect is governance and emerging frameworks. In today's environment, decisions are not judged by profitability but by sustainability, transparency, compliances with evolving regulations. Whether it is board structure, disclosures, stakeholder accountability, these elements are no longer theoretical, but these concepts are very important because they shape real business decisions. That's why for this paper, corporate governance portion is very, very important, which is connected through your set A. Similarly, sector-specific context matters. A listed company operates under a different regulatory requirements. Okay, a pharma company deals with different accounting sensitivities compared to another similar type of manufacturing entity. IBS expect you to be sensitive uh, uh, regarding such companies. We are privileged to have with us CA Amit Rathod sir. He brings with them rich experience across global audits, governance frameworks, and large scale audit delivery modules. His practical exposure will help to you to bridge the gap between theory as well as practical concepts. Today's session is designed to be very interactive, students. I would encourage you not to approach the case as a question to be solved, but as a situation to be understood. If you disagree with any perspective, question it. If something is unclear, raise the issue. That is where real learning happens. Let us use the session to think deeper, connect better, approach problems that the professionals do. With that, let us begin today's session. Sir, over to you.
Thank you, Deepalji. I hope I am audible properly.
Yes, sir.
Okay, so good evening, everyone, and thanks a lot again, Deepalji, for such a, nice background of the IBS examination and the expectations that the institute has from the students. You are also able to kind of guide students on how to prepare for this exam or what we expect in the real life world once you will become a chartered accountant. So thanks a lot for giving that kind of a background, Deepalji. So in today's session, students, we are going to cover two case studies as usual. So what we will do, just to set the agenda for today's session, the first case study that we will be covering. After that, we will take a short break and then we will come up with the second case study. Both of these case studies are very important for you, as I always in all the sessions mention that please don't consider IBS as an exam. It's not actually an exam, it's a practical situation. Once you will be a qualified chartered accountant, the way IBS exam is formed, I mean, it is a combination of various concepts, various subjects, and all. This is the real life scenario. In the real life, in the real world, the same thing will happen. Your clients will ask you, they want you to become their consultants, at times business related issues, at times complications, I mean, geographical complications, corridor questions, there might be legal litigation issues, there may be accounting or auditing related technical questions. There is a lot that the society as an overall expect from a chartered accountant. So these kind of scenarios or situations whereby this IBS exam is giving you a practicality, a practical flavor of all those requirements that you will have to perform once you'll be a qualified. This IBS exam is not an paper, not an exam at all. This is kind of a dealing a client in a practical environment. So when I go through, when I study the case studies, I feel like there is a client who is talking to me. There are a lot of questions that I'm asking client, and then client is explaining everything to me. So the case studies, when they are being drafted, they are drafted from a client's perspective, that if a client is there, what are the background, what is the information that the client will be sharing, and then the questions that are given at the end of the case study, they are more or less like, after giving the background of the client, these are the situations or the concerns the client is having. So the client wants you to solve those concerns. And there is a rightful saying that a chartered accountant is only getting paid in parallel to the level of problems that they can solve or the level of value additions that they can do. So if you really want to be a good, successful chartered accountant, then we need to understand how to solve the problems or how to do the value addition. So I'll try to give more practical I'll try to share my practical experience as and when we'll be going through the case studies. So let's start with the first case study for today. I'm just sharing my screen. The technical team, you can confirm if my screen is visible. Anyone can confirm if it is visible so that I can move ahead.
Yes, sir. Yes, sir.
Okay, perfect. So the case study, the first case study that we are going to cover today is in relation to the Prime P Private Limited, PTPL. Now this is, like by default, it is like a case study which is presented to us. But I'll be very honest, while going through this particular case study, I realized that this is a real life scenario, this is a real life problem. So what happened, there was a client that I was handling, and this is the similar kind of a situation that this client was. And then they started asking a lot of questions. They came up with multiple concerns. They wanted us to do a lot of value additions in the existing solutions that they have developed for the problems that the business is focusing. And they actually wanted us to identify the problems that the business is not able to see. So when I'm saying solve the problems as a to become a good professional, it's not only solving the problems, but at times client is not aware that there might be another problem which they are ignoring. So as a professional, you make them realize that these kind of problems are also there. So the case study is all about a tea private limited company, and we will see how practically things are happening here. So this was established in 1938, and this is a Kolkata-based company. The company is privately owned by the Tribhuvan Das family members who have been in the tea business for the past three generations. So this is not a new company. From past three generations, it was established in 1938. So the third generation is handling the business operations now. Mr. Bhushan Tribhuvan Das started out as a broker in the Siliguri auction center. In due course, he started a tea blending and packaging company. The point which is to be noted here, that they are not selling or trading in the tea leaves. Okay, so they are a blending and packaging company. It means they are selling the tea leaves in with their brand. Okay, so PTPL in Kolkata. Tea leaves are blended and packed at its production facility and sold further to the tea distributors. So they have a distribution channel. Now, you must have heard about this supply chain management and all. So, this supply chain management, the distribution channel is very important for any company who is into this kind of a business. Just imagine there are multiple ways through which the distribution of the products can happen. So the distribution can happen by selling it online and then having the courier agencies and all as a part of the distribution channel. They may get into a contract with any carrying and forwarding agents, which in this industry known as CFAs, right? And then they may have like a wholesaler and a distributor, a retailer, that kind of a mechanism, a channel as well. Simultaneously, they may open showrooms and then they can directly sell to the customers, which is like they can enter into the B2C. There can be B2B as well, where they are doing the corporate tie-ups. I mean, so there are multiple ways, and this all is the distribution channel. So when we are talking about a business, we need to understand there are multiple ways through which the things can be handled. Okay, in smaller cities, okay, so PTP in Kolkata, tea leaves are blended, so and sold further to the tea distributors. Tea distributors in turn sell the packages to other smaller wholesalers. So they have distributors. At times we can call them CFA agents as well, carrying and forwarding agents. So these distributors are further selling it to the wholesalers or large retail outlets. And these retail chains across India stock tea packages blended by PTPL. So it is like in your neighborhood, the way you see there are a lot of grocery stores, there are wholesalers, small wholesalers in your nearby market and all. So these retailers or wholesalers, they purchase the products from the distributors or CFA agents or directly from the companies, and then they keep the stock. As soon as the retailers or the customers need that particular stock, they can approach them to purchase it. In smaller cities and towns where there is no presence of proper distributors. Okay, so what is happening in the small cities and towns? This is a very practical situation whereby a distribution channel from a wholesaler to the ultimate customer. This can be very difficult. I mean, it is not that easy to frequently deliver or pile up or I'll say restock the stock which is finished. So PTPL has local sales agent that it hires on contract to sell tea to small grocery stores. You see, so what is happening? We have sales agents who are getting the goods from the wholesalers or these large retailers, and then they are going to the small grocery stores from where the ultimate customer will be buying the product. Goods are sent to these local agents on consignment. E-packages have a long shelf life and can be stored up to 1 year if stored in appropriate conditions. So the shelf life is really long, which means and up to 1 year of the storage functionality or facility can be there. PTPL commands a moderate 8% market share in terms of sales in the Indian market. So they have 8%, which is a significant kind of a share in the market share in the total tea market of India. PTPL has been a profitable business for most of the years of their existence. The past many years have seen significant inflationary trends in the economy. Like many other companies, PTPL too has been enduring the increase in the tea leaf prices, which is primarily raw material. So this is a very big challenge. Okay. So as a business consultant, you need to understand the problems as well. That what are the problems that the client is right now facing or will be facing. I mean, because of the social, economic, geopolitical situations, everything that is going outside in the world may impact the businesses. At times, businesses are able to identify those kind of situations or problems. At times, they are not able to identify those situations. So, as a consultant, as a chartered accountant, you can advise them on those kind of situations as well. So, the company has identified a particular situation, which is like the tea leaf prices are going higher. So inflation is impacting them. To combat reducing profit margins due to inflation. So the profit margins are getting shrink because of the inflation. It has concocted a uniform blend that it sells under the brand name A1T. So what is happening? The company is coming up with not only a brand but a unique product inside the brand. So what is happening? Tea is something which is very easily available in our local kind of neighborhood. So what they have done, they have created a mix of that tea, which is A1 tea. That's a brand name that they have given to that particular blend. And this is very common. I mean, if you'll see, like I'll give you another example, like the whole wheat flour kind of a mechanism is there. But nowadays, if you realize there is a multi-grain uh, multi-grain flour is also that is kind of like being discussed. So the each brand which is very good, which is very kind of prominent in the whole wheat kind of a brand, they are launching their multi-grain flour as well. And then the multi-grain, how are they kind of trying to create their blend unique is by changing the ratio of various ingredients. So this is the same thing that this company has also done. They have created a a blend of various aspects. I mean, you can recall this can be like a very known brand in the market is like Tata Tea. So they have created a blend which is known as Taja. There is another blend that they have created known as Gold Tea. So these are just the blends to differentiate their product or to bring uniqueness in the blend, so that customers will not end up comparing. So they cannot say now that this particular tea is equivalent to some other company's tea, because now they have created a blend which is unique. So the blend is prepared by mixing few popular tea flavors into one. This concoction was done with the help of an expert tea sommelier a decade back. Okay, so there are sommeliers who are experts in a particular taste, buds and all. So they are experts in the blends. So there is a sommelier who was taken help from, and the company created a blend which is known as A1P. PTPL has used, okay, what is the benefit of creating such blends and all? Since these blends are helping the company to bring uniqueness in the kind of a product that they are trying to sell in the market. So the product cannot be compared to other products. And this is why the premium can be charged by the companies on these kind of products. While there is a tough competition in terms of the price, we are handling a price sensitive market, so we cannot do a lot of price competition. But when we are coming up with a unique product, that premium is there that we can definitely ask from the market. So that's why the uniqueness is something that generally the companies are running for. So PTPL has issued same composition over the last 20 years. The tea that PTPL prepares under the A1 tea is of the black tea variety, which is the most popular tea variety consumed in India. So there are various varieties of tea. There are black teas, then herbal teas, green teas. I mean, loose in the black tea as well. This is their packaged black tea and then loose black tea. So we need to understand this particular market as well, but they are this particular A1 tea is from the black tea variety. The Indian market is crowded with many tea companies like PTPL in retail outlets and grocery stores. Now just imagine the grocery store in your neighborhood. If you will go to the grocery store, you will see there is a stack, there is a kind of an almirah where all this tea is being stocked by these retailers or wholesalers. And you will realize there are a lot of brands. There are multiple brands which are there. So in retail outlets and grocery stores, shelves stocking tea beverages have many brands stocked together. There is nothing much to differentiate PTPL's A1 tea brand from the rest. Now you see, we took the help from a professional who is an expert tea sommelier, and we created a blend. But the problem is, as I mentioned, that this blend or bringing uniqueness in a particular product is not something which is done by only this company. So there are other companies as well which are doing the same kind of a blend. So it becomes very difficult for a customer to identify that uniqueness. Right? If I'm thinking about a Taza tea from one brand, then there is another brand who launched the same blend, maybe the name is different. So until unless the uniqueness is not there, the premium will be difficult to fetch from the market. So what happened? Even after using this particular sommelier, the mix that is created, it is not a much differentiator from BTPL's perspective. Brands have to fight to gain visibility among customers, and this is done using attractive packaging, increasing advertisement spend, etc. Hence, customers are more price sensitive rather than concise about quality of the tea. Remember, in this market that we are talking, the target, the segment market where I'm trying to sell my products, the customer nature is that they are not running behind quality. They are not quality conscious that much. They are thinking black tea means black tea, be it from brand A or from brand B. But what are they more conscious about? The price. So they are considering which brand's tea is cheaper in comparison to the other brand. So we are dealing with a market which is price sensitive, which is not quality sensitive. Okay. Now let's talk about, so this is the background. So this is what I was telling you when we are talking IBS kind of an examination. The situation or the background that is given, just don't consider it as a part of a question. This is actually, it's not a question. This is a real life scenario. This is your client who is giving you background. So when you meet the client, there are four stages that we need to discuss, we need to address. The first is always known as melting the ice. Melting the ice means that we are bringing that confidence, that comfort. The client should be comfortable. And while you are doing those 5, 10, 15 minutes of a normal discussion without work discussion to check their background, from where they have come, who has given them our reference, all those things, XYZ things, that is the first step of relationship with the client. So this all that is being given as a background is those 15 minutes, which is to understand the background. Now we are talking about the numbers. So today in 23, the total Indian tea market is estimated to be 50 billion. Very because of the trade is to good extent. Now we want to see that this particular product can not only be sold in India, but it can be sold in different countries as well. It means from an Indian market of 35,000 crores, I will start looking to a global market, which is $50 billion. Would like to want to say should be the right market in the countries, which cities, which states should be the right markets. What are the corridor challenges that you'll be facing if you're selling in Europe? I mean, how to deal with uh, like GDPR regulations and all. There, if you are trying to sell it to USA and all, I mean, there are a lot of things. FEMA will be there. Some restrictions from RBI is there. PMLA is there. And while the client of yours, they are focusing on the business, they are just looking at the 50 billion worth of the global market. They might not be able to see all the complications or complexities that the law or the regulations are making for them. So it is the place where they will need your help. Demand in other segments like green tea, fruit, and I told you right. So this black tea is the major market, but we have other tea segments as well. So these are the also picking up. Despite optimistic prospects, the management at PTPL observes stagnation in the tea sales rather than growth. You see, so they have kind of at a level where maturity has come, stagnation of the sale has come. Now they are thinking why the stagnation is there. So they are thinking, can this market be further penetrated beyond 8%? If we want to increase the market share to some different level, what are the challenges the company is facing and how to do it? Okay. So currently PTPL supplies tea to 300 distributors. An investigation into this revealed that many of the distributors are also distributors for competitors of PTPL. Very practical situation. Like if there is one distributor, they will not solely rely on one company. They will not be saying like we are the distributors of PTPL. They'll be they will not be only PTPL, but they will be thinking that this distributors are also distributors of other competitors. So there one distributor cannot be only one company's distributor. So generally what happens, like I mentioned, this CFA kind of agents who are carrying and forwarding agents. So what are they doing? They are having a godown, a warehouse, which is very big. And what they do, they store all various types of brands of tea over there. And then they dispatch from there, from that CFA outlet, CFA warehouse to the wholesalers, to the retailers and everyone from that one location only. So they are kind of common distributors. The investigation further revealed that in the last 3 years, many times PTPL has delayed the delivery of orders to these distributors. So if I am a distributor and I have multiple brands that I'm dealing with, if PTPL's order will be delayed, I will not stop my sales. If a retailer or a wholesaler is calling me to ask for the stock, if I don't have PTPL's stock, what I will do, I will sell others' stock, other brands' stock. The reason is because there is no uniqueness, right? So the clients may be indifferent because the product, the A1 tea that we tried to create a blend using the sommelier's help. This has not brought that much of uniqueness in my product. So if the distributors will not have the stock of PTPL, they will sell someone else's stock. And you know what will happen in that situation? The sale of PTPL will be impacted. Delivery orders. When distributors run out of A1 tea packages, they place an order with on time, our stock. So what is happening? The lost opportunity of sales. If I would have given the stock, I have a replenishment in our factory, in our godown, in our warehouse. This is production against demand. As soon as the demand will be there, my production will happen. That's why it says just in time. And in the inventory terminologies, this is JIT production is something that is very famous. This was implemented 3 years back by the production manager who had wanted a lean production system. Accordingly, the tea blending process happens only when a distributor places an order for tea packaging with PTPL. A typical order size would be 50,000 packages a month from each distributor. In a month, at least 200 distributors place order with PTPL. Okay, so on an average, one distributor is ordering 50,000 packages, and there are around 200 distributors who are placing orders. So the main problem that the company came across is that they have implemented a JIT production system. It means they don't stock any stock in the factory and all. So whenever the demand will come from the distributors, the production department will run to produce the products. And then when they will produce the product, it will take some time, which will create some level of delay. Right? So the company has to balance it out. Storage cost, or they do a comparison over there to understand what will make more sense of having some inventory to store or to create just in time. Okay, so this is, I'm just giving you from a consultant's perspective. So this is generally how we deal with the situation. Now you see there is another challenge. The raw material in the form of the tea leaves is stocked in advance by buying tea from various auctions. So what is happening to create this particular tea? A1. You see, this is a special blend that companies making. So to create this, they need some special ingredients as well. This may be tea leaves. This may be some other, maybe some dried, I will say, spices. Maybe something. To give an example, like ginger may be there. Maybe some, the cloves can be there. I mean, there are multiple things that they will need, or some different types of tea leaves as well, right? So what they do, they at least store the raw material so that when the requirement is there, they can immediately can make that blend ready. Since A1 tea is a blend of popular tea flavors, it requires a mix of tea leaves providing those different flavors. You see, so even the tea leaves are different. They are mixed together in a blend. It was found that these different types of tea leaves had different growing cultivation cycle and were grown in different plantations spread across India. Hence, while stocking a full raw material, it does not happen many times that a particular type of tea leaf is unavailable at the auction center. In such cases, the tea leaf has to be sourced from some other auction centers or sometimes directly from the plantation. These delays increases the lead time for procurement for tea leaves. Very practical. I mean, if you have created a blend of multiple tea leaves, and those tea leaves have to be available, right, to create that particular blend. So if that is not available at an auction center, we need to go back to a different auction center, or maybe we need to go to the plantation farm as well at times, which takes time. The purchase manager at PTPL has not taken any initiatives to resolve the problem and reduce the lead time for the procurement. Hence, because the entire raw material of the required varieties of tea leaves are always not readily available, it has many times happened that there have been delays in the production of the blended tea. Since the production is JIT system based, PTPL does not have buffer stock of blended tea, finished products, from which it could try to meet the other requirements at least partially. This is the primary reason for delays in the sale delivery, which has resulted in the distributor referring to the same rival tea brands. You see, very practical situation. So now what is happening? Try to understand. We have a client. They are into the tea manufacturing, tea blend creation, branding kind of a client. Now what is happening? They are facing a challenge that they are not able to deliver the products on time to the distributors. And when distributors are running out of the stock, they are selling other brands, which is costing us. Now as a CEO, you will go back to the sales department, you will ask them why you are not able to fulfill or achieve the targets. The moment you will go back to the sales department, they will simply say, listen, sir, I am ready to sell, but the problem is the production department is not efficient enough to make the products available whenever the distributor's demand is there. So when I am not able to fulfill the current demand, there is no way I am going out in the market to sell more, right? So the sales department will raise their hands that I cannot help in this situation. Then you will realize as a CEO that there is a problem not with the sales. Sales is doing okay, but the problem is with the production department. So you will go back to the production department, and the production department will have their own problem. They will raise the hand by saying that, listen, sir, I am ready. The JIT system we have developed, JIT system, I can immediately blend, create that blend, I can create this. But the problem is I don't have the raw material. I don't have those tea leaves which I need to create this particular blend. The moment you will realize this as a CEO, you will be like, no, no, production is okay. We need to see the procurement department. Now you will reach out to the procurement department. When you will start discussions with the procurement department, they will tell you their particular practical challenges. They will be like, sir, we are ready to source, but we need to understand this is an agricultural product. It is seasonal, and we need to have at least a 1 month, 2 months, 3 months of stock. We need to kind of file that so that we can supply or we can give it to the production department as in it is needed. The point is they will again put the blame on the sales department. So they'll be like, my sales are not giving me the right forecast. They are not giving me the right projection. If they will give me the right projections, then we will definitely be able to procure that much of raw material in advance, and then there will be no delay. So what happened actually, we started with the sales, it went to production, then from production to procurement, and then it came back to sales. And this is the loop that nobody is interested in breaking. And that's why, I mean, the sales will become stagnant, the revenue will start reducing slowly, and then there will be a lot of pressure on the profit margin. And this is the time where you as a consultant, you have to step in the company. You need to understand the whole scenario, whole problem, and then you need to find out a solution to this kind of a situation. And when I was going through this particular case study, I realized that this is not only happening in the productions or manufacturing kind of industries, but this is in the service industry as well. In our offices, we on daily basis we see, what is happening. Try to understand if there is a client escalation. We always go back to the delivery manager. So let us suppose there is a manager who is delivering a project, who is delivering or serving a client. If there is an escalation on the client, you will go to the this particular manager, and then you will be asking why the quality is hampered. They will be like, sir, we don't have resources. Okay. Okay. So you don't have resources. Have you raised this concern? Yes, sir. I have raised the concern. Now you will go back to, so you'll be like, okay, okay, I realize that it is not your mistake. You will go back to the HR, and then you'll be like, why we don't have resources on time? Then the HR will have their own kind of problems or situations. They will come back that we don't have the right profiles, we don't have the right candidates, or probably we are arranging or doing our best. We have sourced multiple profiles, but they are not getting selected, or the managers are not available to take the interview because they told us that they are busy delivering a particular client which is urgent. So what is happening? There is a loop that is being created, right? So HRs are not getting the demand on time, so they are not able to hire. The L&D department is not able to uh, train the resources because they don't have the projections. They cannot find the right trainers because the time is not getting set. I mean, the admin or IT department, they are running out of the devices. The laptops are not available because they didn't get the information on time from the HR, right? That how many resources will be joining when, and the managers are not able to deliver the project because they are also not aware that even though they have raised a concern 6 months before, but the solution is still not there on the ground. I mean, very practical, very practical. It happens on daily basis. So the rest of the case study will give you that scenario only. So Mr. Kumar, son of Bhushan Tribhuvan Das, is the CEO of the PTPA. So this is the third generation, right? Which question mentioned. So he is the CEO, and he has called a senior management meeting, maybe the HOD meeting. So all the head of departments, the sales head, the production head, the procurement head, everyone is attending that call. And the discussion, obviously, whatever I told you, this will be the discussion. So let's see what is happening in the question. Last month, he called the senior management of the company to understand the reason for stagnating sales. This month, there was a follow-up meeting. So last month we discussed, and then we took some actions that we will be doing this, and it will increase sales, or it will benefit the profit margin. Now we are doing a follow-up meeting that we decided something in the previous meeting. What happened? This month, there was a follow-up meeting where the findings of the investigations detailed above were presented to him. On presentation of the findings, an argument ensued between the sales, production, and procurement managers defending their department and function. So now you see when things will not go the way they should go, people are tend to find a head to shoot upon. So now everyone is trying to find that a head. They are just shrugging their shoulders off and they are like, it was not my problem or I am not the reason because of which the sales are dipping down. So what is happening? People are now blaming. So when we are asking Sally, who's the sales manager, we are asking, hey Sally, why the sales are not happening? Let's listen to the Sally's response. She is saying, I am facing the brunt of this problem. It is already very difficult to sell A1T as it does not enjoy very high visibility, due to which the end user customer is indifferent to the brand in its quality. So she immediately raised the concern that the brand or the product or the packaging is not different. It is not attractive enough so that customer can pick it up directly from the shelf on their own. So she's saying it is very difficult to push this A1T into the market. Now, distributors are also not getting any additional incentives. So the first problem she raised is the brand. We don't have a recognized brand. Second, she is saying is the packaging is a problem. Attractive packaging is not there. Third, she is saying distributors are not getting extra margin, any additional incentive. Since the profit margins they derive is just the same. So if it is almost the same, they distributors can sell anything else as well. While I am trying my best to promote and sell our tea, I am not given any sufficient support by PAN. So she is saying it is not me, it is Pam. Who is Pam now? Production Department Manager, HOD of production. So she has put the whole blame. So she is like, you see, there is a problem statement. So she is saying that the brand is not there, the product is not there. You see, the mix is not adequate, distributor's incentive is not there. So she saved herself by saying there are 10 problems, but I'm still ready to sell. I'm still ready to push this particular product. I can do. I'm capable of making sales, but the problem is PAM is not supporting me. PAM is not providing the production on time because of which sale is not happening. Is that not the least I can expect? So she is asking now PAM. Now PAM is there. You see, PAM is also not somebody who would like to take the blame upon him. So they will definitely now the production department. Let's listen from them. So PAM is saying, my hands are tired. We have best-in-class blending machines that can blend tea in huge quantities on very short notice. The short turnaround time for sales delivery was considered while implementing the JIT production system 3 years back. So he's saying that this kind of a situation will be there. This is what we already estimated. You see, if he will not say this, the company may start blaming him that how can you not forecast. Like earlier also I mentioned, a good manager is somebody whose projections or forecast is very close to the reality. So if your forecast was not close to the reality, what we are facing now is the shorter turnaround time. So while implementing JIT, if you didn't forecast that these kind of situations will be there, then you are not a good manager. And nobody will definitely be like to be in that spot where people are blaming them. So he's saying that I have 3 years before when I implemented JIT, I knew these kind of situations will be there. My machines are ready, everything is ready. We can deliver the products within the turnaround time that the sales team is asking. But I have a different problem. What is the problem? This is the reason why we have the high performing machines. I just need a phone call from Sally. It means just a phone call and my product will be ready. But the problem is my department cannot be blamed for delays if the requisite raw materials are not available. So he's saying I don't have those tea leaves or that mix which I need to create this particular plan. And if I don't have this, please don't blame me. If Sally will call me for a minute, I will start my machines, I will make the product, I will do everything. But the problem is my hands are tied. Go back and check with the procurement because they are not able to procure the stock of or the inventory or the raw material on time. So I cannot do it. There is nothing much I can do. Now, Pam put all the blame on Sam. Sam is the procurement manager. Do you think Sam will agree to this? Not at all. Let's listen to what Sam is actually going through. So Sam is saying it is unfair to lay the entire blame on me. I have no information about what the production is going to be during the month. I need at least 1 month's advance notice, if not more, to ensure that the raw material supply is uninterrupted. Perhaps my colleagues here have forgotten that the tea leaves are agriculture products that cannot be grown on the drop of a hat. I need time to get the varieties of leaves from different auction locations across India to our storage facility here in our plant. Certain varieties are available only for few seasons. Hence, procuring them during off-seasonal month is very difficult. While JIT production may work fine for blending, JIT procurement is impossible for tea leaves, right? I need advance notice of raw material requirements. Without this information, I cannot ensure their supply. Simple. So Sam is saying, until unless you cannot give me forecast, projections, how many will be the requirement, how many packets you will be needing, I cannot help you. I mean, what a beautiful conversation this is. Because, like when you sit in a board meeting, you will realize this is going on in front of your eyes. The client is fighting. I mean, you are fighting with your team. This is the everyday's job. As as a leader in a organization, as somebody who is running the show, I mean, this is everyday's cup of tea. This is your, the major portion of the job profile. You have to solve these kind of situations. There are three managers, all of them are putting blame on each other. So what will you do? You will need a third party. You will need a consultant who can help you in this. Mr. Kumar says, right from my father's days, all the department had complete understanding of each other's department. We have never felt the need of having information system in place. All that was required was a phone call between the managers of the business to be done. Of course, over the years, we have now grown in scale. However, this has led to gaps in passing on the information. How can we resolve this? This is the CEO's question. So, what is happening? He is realizing that the departments have grown to different level in different size. So, what may happen? The sales team is sitting in some other state, let us suppose. The production is happening in some other state, okay, and then the procurement is happening from some other state. So there are different teams working from different remote states, and the communication is not appropriate. So procurement team does not know how much to procure, production team does not know how much to produce, the sales team does not have any forecast on how much to sell. So this is the kind of a question. I mean, what a beautiful problem, I will say, the customer is facing from a from somebody who is a consultant, who is somebody who is supposed to solve some problems. If these kind of situations are coming in front of you, I mean, you should feel like blessed, because this is what you will be getting paid for. If these situations or problems will not be there, the more complex the problem is, the better the outcome will be for you. I mean, always, I never prayed in my life for the easy situations, to be very honest. I always ask for difficult situations, but I do ask the strength to endure those situations as well, to confront those situations as well. I mean, that should be our approach. If the complexities are there, love them. If you are going through a difficult situation or a challenge, I mean, love those kind of situations. There is a good saying which we keeps on repeating, and the saying goes like, "Be comfortable with being uncomfortable." The moment you are realizing there is something, some level of discomfort is there, the situation is very, very complex. The client is tensed. I mean, these are the situations because the client is approaching you so that he can feel relaxed. He can feel like somebody is there to handhold to help him come out of that difficult situation. So that's what the role of a consultant, of a chartered accountant is. So very beautiful case study. We will now move back to the questions and answers. Okay, just give me 1 minute. Okay. So now, since we have an understanding of the whole of the case study, let's go to the first question. The first question says, given the case study scenario, which pricing strategy do you think the PTPL is following for its A1T brand? Okay. I hope you understood the whole of the market. So now you see there are four types of pricing strategies. The first one is the cost plus markup pricing. So it generally happens in kind of situations where the branch offices are there. or you are handling someone's business on some behalf. Maybe you are just like I'll say a coordinator or someone. To give an example, in most of the cases where one of the branch is here in India, and this is a branch which is of, let us suppose, of a kind of an MNC which is set up somewhere else. They generally do the cost plus markup kind of a pricing, whereby they ask, since this is a branch, this is somehow helping in creating some level of revenue. So this branch has to bill the HO, but how much will be the billing, right? So generally transfer pricing comes in picture, and after doing a TP study, the TP consultant may suggest you that you need to keep 8% margin or 10% margins over the cost so that you can meet up those minimum requirements. So that is known as cost plus markup strategy. We are not here targeting any cost plus some level of markup. So A option is out. Second is the target rate of return, which says like we have to get this much of return. So let us suppose I started a business and I have invested 10 lakh rupees. So my target is that I will get 10% of this 10 lakh, right? So 1 lakh is something that I want to earn, and then I will start forecasting my sales, that how many numbers of units I will be selling, and then I will divide that with the target number. This is how. So in this particular tea business, we are not doing this as well. Perceived value pricing is whereby the customer is not paying you because of your product, but they are paying because what they perceive the value of the product is. It means, just to give an example, like they are not paying uh, iPhone. Just to give an example, let us suppose an iPhone is right now available and 80,000 rupees. To give an example, the customers are not paying 80,000 rupees because they think the the cost plus markup of the product is 80,000 rupees. So they are not doing it. What they are doing is they are paying 80,000 rupees because they think that iPhone is worth 80,000 rupees. So there is a perceived value. So generally, when you are able to create a brand for the same product, you see, just to give another example, like for the tea brands as well, there is one brand which is selling little higher than the other brands, and people are still buying that because it's a brand value. So customers are convinced, they are perceiving some value in your pricing. So when you are asking for a higher price, they themselves are saying, yeah, the quality is good, they deserve a premium and all this. And this is not only happening in the product industry, but this is happening in the service industry as well. You see, just to give an example, if you want your income tax return to be filed, if you will be reaching out to a smaller, let us suppose, firm, then you know that they will charge lower price. But the moment you will be reaching out to a top organization, maybe top 10 big fours and all, you know they will be charging higher. So this is the perceived value. Maybe the efforts will remain same. If this return is taking 2 hours, maybe it will remain same. Okay, but you have some perceived values that this will definitely take some more time. Then going rate pricing is basically that you are going according to the market. So at what price the market will accept your product is something that is known as going rate pricing. So in this particular situation, obviously it's a tea business. The competition is really high. So what are we doing? We are going with a going rate pricing. We are trying to fix a price which the market will accept. So we are not going with the perceived value or target return or cost plus markup. So I hope it is clear now. So what we will do, we'll quickly start going through the solutions as well simultaneously so that you know. So the answer of one is the going rate pricing. The reason I have explained to you. We'll go to the second one. So second one says that below is the cost structure for producing 1 kg of A1 tea. Remember, this A1 tea is the blend that the company has created. So they are saying for 1 kg of A1 tea, you need direct material cost, which is 200. This is the kind of leaves, etc. that was there. Direct labor cost, so we'll be spending 20 minutes, and 300 per hour is the labor cost that I'm giving them. So 20 minutes they take for 1 kg of A1 tea, 100 rupees of labor cost. Overhead cost is around 50 rupees. Total cost is 350 rupees. From a business standpoint, this 50 is very important. You see how you will calculate the overhead cost. You need to know what is the total overhead that is going to be there. So there has to be some level of forecast. Again, a good manager is somebody whose forecast is really near to the reality, to the actual number. So you need to know the overhead cost, and then you need to divide it with how many numbers of packets or how many kg of A1T you will be selling. Just imagine if you are not able to reach out to the number target. Let us suppose you thought 5,000 kg of the A1T I'll be selling, then this number is 50. But if you'll end up selling 2,500 only, to give you an example, you know what has happened? The overhead cost is something that you are not able to recover because your target sales is not achieved, and this the remaining overhead cost that you are not able to recover will put pressure on the profit margins that you set initially, and there is a high probability you will end up incurring losses. Or if you will put this number wrong, you'll be thrown out from the industry by the competition itself. What if the other company is targeting that with the same kind of an overhead, they will be able to sell 10,000 kg of A1T? They will put this particular overhead cost lower. And this is a practical situation. So that's why we need good managers. That's why we say we need consultants. That's why we always say a business cannot run without a bail in picture. When I tell people a bail is something that you need to arrange, bail means B is for your banking partners, A is for your accountants, advisors, and auditors. Don't run a show, don't start a business, don't work on a business without bail. So B is your banking partners, you need very good banking partners. A is your accountants, auditors, advisors. I is your insurance agents. Very important. Even if you're in the service industry, like all the CA practicing firms, they have indemnity insurance. They have, if God forbids, like if tomorrow a client comes and then they try to indemnify you, they try to ask for some recovery because of some charges, for some advices, because of some certifications that you did. I mean, you have to have insurances in place. Otherwise, there may be huge penalties, huge damages that the clients may ask at times, and mistakes may happen. Forget about it. I mean, this is only with the small firms. Even the bigger firms, like you see, PwC, Satyam happened. Enron kind of scandals may happen. It can happen anywhere with any firm, irrespective of the level of the quality. So insurance is something which is must. And then L is the last one is the legal, litigation, lawyers. I mean, you need to have a legal team as well. If you're running a business of this size, four things must: banking, A for advisors, accountants, auditors, and I for insurance agents, L for legal. And you see, as a chartered accountant, you fit in all three roles, which are starting with A: accountant, auditors, advisors. Advisors means consultant. Okay. So overhead cost. So the total cost of 1 kg of A1T is 350 rupees. In addition, there is 1 kg of A1T also requires 0.6 kilo of other material, which cost 80 rupees. 4% of the substandard quality which cannot be used in the production of the tea. So 80 rupees per kg, you are getting something 80 rupees per kg. The problem is 4% is substandard. So if it is 80 rupees, then in 80 rupees you are only getting 96%. So you need to see this 0.6 kg, how much it will cost. So PTPL sells 1 kg of at 400 rupees and they are wishing to have 10% margin. It means they want the costing to remain around 360 rupees. Okay. So in this situation, we need to calculate whether it is possible or not. Is the target cost being met? So the target cost is how much? 400, 10% is 40 rupees is the profit. So the target cost is 360 rupees. Now, what is the actual cost? If you will see 350 rupees of this much, you need to do the costing, calculate the costing for 600 grams of this particular tea blend as well. So 80 divided by 96% because only 96% of the quality is coming to us, and multiplied by 0.6 kg. So you will clearly see how much is the price. You see 0.6 kg, 96% multiplied by 80 per kg, which is 50 rupees. So 350 was the total cost, 50 of this. The total estimated cost is 400. So if the target cost of the company wishes to earn 10% of the revenue as profit is 360 per kg, selling price rupees 400 per kg, less profit margin rupees 40 per kg, which is 360. Okay, so that's what I told you. If the 400 is the price, uh, and 10% margin is something that is targeted, the costing should be maximum 360 rupees, but the actual costing of the company is 400 rupees. So the option is no, the total estimated cost is 400 while the target cost is 360 rupees. So A is the answer. Coming back to something which is the next thing is Rani is a tea sommelier. I told you who is a sommelier. Sommelier can be in the wine industry, can be in the bakery industry. They can be. I mean, they are somebody who is very expert, very decent. They have experience in the taste, right? I've seen this. I was doing audit of one of the company who's into like a very big wine brand, and then we met this sommelier. So this person, we were actually smiling when we met this particular guy because he was the taster. Just imagine a taster in the wine industry. His job is every time a batch is produced, his job is to ensure the quality. So we were smiling. We were kind of junior auditors at that moment. We thought probably after each blend is getting ready, this guy has to taste it. So he'll be, like going there with a glass and then he'll be tasting it every time. But this was not true because he was a sommelier. The moment you will be doing it, the taste buds will be uh, kind of adjusted. You just cannot provide your opinion or you cannot provide the outcome or you cannot evaluate that particular blend if you are not in your 100% senses. So what happens in those kind of situations? These sommeliers, he used to smell it, the blend, right? He used to smell it, the blend, and then he used to pass it, like whether the smell of the blend is appropriate or not. So sommeliers are somebody, they are someone who has experience into that kind of a taste. So Rani is a tea sommelier. So she's an expert with the tea blending and all, and she has got recently graduated with from a university, and she has a degree of certified tea sommelier. I never realized that this is also a degree which is available in the market, but yes, they have this degree. Few months back, she started two outlets by the name of Queen Tea. So she started with two outlets in Kolkata, which serves government tea, specially crafted by her. So again, like we have A1 tea, a kind of a blend. She also came up with another blend, and she started selling this tea. Business has been profitable and has gained traction in terms of revenue and customers. Rani envisions that she can revolutionize the tea industry by influencing the taste preference of the tea customers. So she's thinking that she knows the taste of the customer and she can uh, revolution. So she can revolutionize this particular tea industry itself because she understood the taste buds of the client. Her specially crafted tea is authentic, unique in flavor that can be appreciated by real tea enthusiasts. India's economy has space even for niche tea enthusiasts who are willing to pay a premium for a good cup of tea beverage. However, Rani is facing many issues running the business like access to extra finance, networking, how to market her products. Hmm, Okay, we have a question. We'll address this particular question as well. Okay. So, Pranav, I think the last session that I took, we covered this particular aspect as well, but I'll get back to you. Let me just quickly finish this up. So, in this particular situation, if this is the situation, then at what level or what is the person that they will be approaching to? So, they need an incubator. An incubator is somebody who invests in your ideas. Okay. An accelerator, they are somebody who is helping you once the idea is finalized in setting up the business to move the business, to push the business to a startup kind of a stage. A startup is something from where you start expanding your business. So once you have an idea, a business, now you are able to kind of fix it up and then you will be going ahead and doing it. Expanding it. So you need a lot of finances to expand, to multiply this particular business. And then an intrapreneur, this is a new terminology. You need to understand this. An intrapreneur is somebody who is working as an employee with a company but they are using the resources of the company itself to start a new product line or a service line. So they are kind of an entrepreneur, but on the payroll of the company. Okay, so they are known as intrapreneurs. So in this particular situation, Rani definitely needs accelerators. In order to drive up sales, PTPL started offering a tea cup free for every 1 kg of A1 tea bought per order. This would be an example of, obviously, if we are giving one tea cup, then that's an example of promotion. I'm just trying to speed up this particular thing so that we will spare last 15-20 minutes for the discussion around the approach, around how to address or how to kind of appear for this examination, how to prepare for examinations, or if there will be any specific questions related to the examination pattern, etc. In order to drive up sales, PTPL started offering a tea cup free for every 1 kg of A1 tea. So this is a promotion. Okay. Next is there is an employee of PTPL visited Guwahati to purchase tea leaves from an auction at Guwahati Tea Auction Center and had stayed in a hotel located in Guwahati, Assam. At the time of checkout from the hotel, the invoice was issued for an amount equivalent to rupees 1 lakh. The hotel issued invoice in the name of PTPL and GST was charged at the rate of 14% CGST and 14% SGST on total invoice amount of rupees 1 lakh. Out of such amount, the amount recoverable from the employee towards non-official stay by PTPL was 50,000 rupees. So the employees will be paying or will be sharing this particular thing 50-50. Whether input tax credit is available on the GST paid by the PTPL on the invoice amounting to 1 lakh rupees to the hotel located in the Guwahati, Assam for stay of the employee. If yes, please specify the amount, whether it will be 50,000 or 1 lakh. So in this case, if you will realize the PTPL has paid CGST and SGST, while this particular CGST and SGST is paid in the Guwahati, right? The company is incorporated in Kolkata. So the business is in Kolkata and they are paying taxes in Guwahati. That too, send CGST and SGST. There is no IPST which is paid. So that's why the input credit will not be available in this case. Sixth is PTPL entered into a contract with main distributor Siliguri for supply of 1 ton of A1 tea. It sent the said consignment to the distributor and paid loading and unloading charges of rupees 20,000. Which of the following statement is correct under the GST law? Now you see, so they are saying that there is a 20,000 rupees of the unloading charges. So when somebody is paying loading and unloading charges, whether the GST is applicable on that or not, if this is agriculture product, it will not. Otherwise, it will. But the point is, the moment you will be processing tea leaves, the moment you will be branding them, it is not a agriculture product anymore. So if it is not an agriculture product, it means the GST will be applicable. So the answer will be C. Yeah. Okay. PTPL recently came across a new export opportunity involving the export of the tea to country N via the rupee state credit route. However, the person who will execute the trade is based out of the country N and would charge a commission of 20%. The CFO informed the CEO that we cannot enter into this trade as the remittance of commission on the rupee state credit route is not allowed. Considering the given legal position of the execution of the trade through the payment of commission on export under rupee state credit rule, comment on correctness of advice of CFO on such remittance of commission in the light of the Foreign Exchange Management Act. So the famous says that while you are trying to export to the new opportunities, the commission that you are planning to pay, you cannot pay more than 10% of the commission. Okay. So the answer is no, the CFO is incorrect. Although commission cannot be paid on export through the rupee state credit route, however, commission up to 10% of invoice is allowed if it is tea or tobacco business. Okay. So since in this particular case it is 20%, this particular transaction will not be allowed. Here still cannot export the tea because commission only up to 10% is allowed. More than 10% it is not allowed. The next is basically the management of the PTPL has developed a strong internal control in its accounting system in such a way that the work of one person is reviewed by another. This is known as in the audit maker and checker, right? Or performer or reviewer relationship. So maker and checker is very important. I mean, this is a very important internal control. Every time you see a transaction, a risk is there, a control is there. There is always a maker and a checker who is kind of allocated. So, since no individual employee is allowed to handle a task alone from beginning to end, the chances of early detection of frauds and errors are very high. So, in this system, what happens? One person is performing a task to one extent, and then the other person is starting from here. Just to give an example, if let us suppose an HR is supposed to hire some resources, what is happening? HR is not the one who will be doing everything on her own. So, what will happen? Somebody will send a requirement of an let us suppose headcount, a resource is required, a manager is required to the partner. Partner will be approving it. After partner approval, it may go to the HR for approval. Then the HR will start from there. The first thing they will check whether the adequate approval is there or not. Then they will reach out to the consultants, um, to maybe the placement agencies to seek some CVs. Okay. Now, which placement agencies are there to whom the HR will be approaching is also not in the HR's hand. What has happened? The company, the firm has already decided that these are three, four, five placement agencies where you need to reach out to. So, in that manner, everything is uh, subdivided into smaller tasks. And the one group, one department's work is already checked by the second department. So this is how the corporate works. So they are saying since no individual employee is allowed to handle a task alone from the beginning to end, so the error of detection is very low. To facilitate the accumulation of the information necessary for the proper review and evaluation of internal controls, PTPL's auditors framed an internal control questionnaire to obtain an understanding of internal financial control relevant to the audit in order to design audit procedures that are appropriate. So, which of the following questions relates to the procurement of the tea leaves? So, auditor is asking some questions, and now the question is asking the risk that we are trying to address is procurement of tea leaves. So remember, the questions we need to identify what are the questions which will be addressing the procurement of tea leaves. So the first question is that is there a procedures in place to match received tea leaves with corresponding invoices? Very important. So this is the procurement. It is known as like when you will receive the goods, the first thing you will be doing is doing an entry. Goods received note. Okay. The moment you are receiving the goods, you have to do a GRN, right? And we call it like a three-way match as well at times. That the PO has to be so PO will be matched with the GRN and then it will be matched with the invoice of the vendor. So when I'm procuring, I need to check whether the PO was there, PO, the rate which is mentioned, the quantity which is mentioned on PO, whether that's the same the invoice has come for. And whatever the invoice has come for, whether I have received those goods or not. So I'll be maintaining a GRN. So my first question is very valid, whether a three-way match is happening. In short, whether the quantity that I am receiving, whether I am matching it or not. So this is relevant. Second is there a procedure of monitoring broad customer preferences worldwide? So how are you monitoring the customer's preferences worldwide? So this is a more or less like a sales related question. Okay, or I will say a marketing related question. It is not a procurement related question. Third is are provisions for bad debt made based on again this is not a procurement related question. This is again a debtors related question or the finance related question. Fourth is there a designated authority responsible for approving tea leaf procurements? Very important. Yes, this is for procurement of tea leaves. Is there a confirmation process such as signed delivery receipts to validate successful deliveries? This is related to sales. It is not related to procurement. So for procurement, there are only two, one and four, which is related to procurement. Okay. So the correct answer is D. First and fourth. Okay. Now, question number 9 says, now we are starting with the descriptive question. So when you draft the answers for descriptive question, I generally ask or your first para giving a background of the client, that what is exactly they are going through. The second para that provide our answer. And then third para should be on how are you mapping the client's problem, and then the para or the provisions that you just mentioned. So your third para should be interlinking both of them. Okay. And then you can conclude on the last line about the funny conclusion that you have. Okay. Putting something wrong. That's what I will always be kind of trying to avoid. So what happens? There is a very good saying again, which goes like it is better to have no name than a bad name. Okay. So my suggestion will be, if you are confused, it is like in the interview as well. We tell people, if you are not convinced, if you don't know 100% the answer, please don't quote any sections. Please don't quote any such provisions which you are in doubt. Okay. Considering this IBS is a open book examination, you have that liberty to go back and quickly check on the provisions that you are confused about. But if in the interest of time you don't have that much of time to go back to do that research, I will highly recommend to skip the sections or those provisions, reference of those provisions. You can write down like on the basis of the Companies Act as explained in the Companies Act, or in the provisions of Companies Act. I mean, don't go into that depth then. Okay, don't mention about the sections or those provisions which can create a negative impression in the final answer. Okay, so that's a suggestion only. So I'm again summarizing three paras and then one conclusive statement. First should be to explain the case, and you can take the help of the case study itself. The second should be about the provisions. If you are sure, if you are able to find those provisions from the books, go ahead and write down the exact sections, exact provisions. But if you are not able to find out because of the time constraint, you're not able to do that much of research, please don't mention specific sections or provisions which you are not sure about. Third thing should be, how are you going to link the first case study or the problem with the second, where what are the sections and the provisions or the regulations around, and this should give a direction to the examiner that in which direction you are going to conclude. The last line should be the final conclusion. Okay. So in this descriptive question, if the question says anticipating heated arguments, Mr. Kumar on behalf of PTPL has hired you as a management consultant. Okay, come on, our job has come finally. So I mentioned about BAIL, which is BAIL, banking partner. A is accountant, auditor, advisor. They are hiring you now as an advisor. Okay. So you are a management consultant to guide the company on ways to improve its sales and increase its market share. Your priority is to resolve the issue of delayed sales delivery. So your priority is to resolve the issue of delayed sales delivery. So your sales team is pretty confident that if we are able to deliver the goods on time, they will be able to sell it. I mean, the sales will increase. They are pretty sure about it. So what are we doing? Trying to do is resolve the issue of delayed sales deliveries to the key distributors. Reduction in instances of lost sale opportunities will dramatically improve the sales of the PTPL and grow its market share. What do you need? Write a brief note addressing to the senior management. Advise critical points that need to be attended to in order to resolve the issue. Like you see, in these kind of situations, they are generic questions. So what I just answered is basically, if you need to take some technical help, some level of technical knowledge to solve a question, then you need to follow those kind of paras. First is explaining the case study, second is those provisions and all, third is the listing. But for generic kind of paragraphs where they are simply asking you to write on the basis of your knowledge, on the basis of your understanding of the industry and the situations that they have given in the case study, I mean, you need not to focus on those three paras. You can bulletize your answers by mentioning point number one, two, three, four, five, whatever points you are able to understand. Okay. So you need to give kind of your case study, the whole of the case study. So you can mention about the forecasting is not done properly. You can ask the sales department to understand the customer preferences, how or what is the frequency of the customers are demanding. The distributors, right? We are such an old company. We can study from last 1 year, 2 years, 3 years to understand the sales trend, that how many quantities are being asked by which distributor. We can keep some margin of safety as well. I mean, we can because we are doing some projections, right? So we can be more conservative. If we want to increase or predict our sales at a higher level, considering the team, the experience that I have, we should do that. So this all is something that you need to write down in the para to explain to the management that as a consultant, how will you suggest? So, so this is how they write. Like they will be talking about the JIT production system if it is working well, right? So if there is no problem in the JIT, the problem is with the procurement. The procurement's problem is that they don't have the projections. So projection is the problem of sales. So now sales, they have actual data ready from last 1 year, 2 years, 3 years. So we will recommend sales to do the some trend analysis to understand what is the best forecast. And on the basis of that best forecast, the procurement can happen of the raw material, and then if raw material is readily available, GIT is working fine. So this is the kind of a consultation that I will be giving, and if required, I'll be helping the sales team to understand that trend analysis as well. Okay, so these solutions which are given, which is kind of descriptive solutions, they are given for your benefit. Okay, they are given for references. There is no hard and fast rule that you have to write down your descriptive answers in this manner only. Okay? So if 10 students are attending this particular question, they may answer in 10 ways, 10 different ways for a particular question, and all are correct. I mean, it is whether you have covered all those main points which were explained in the case study, and then how have you presented them. That's it. Okay, so this is how you write the descriptive answer. The next question is about PTPL extends a net 30 days credit to its distributors, customers. The 30-day credit period begins from the time of dispatch of goods from PTPL's warehouse. Invoices are generated and posted to the distributors. On an average, it takes 3 days after dispatch to generate the invoice and 3 days to post to reach the distributors. So total, I mean, just imagine they don't have a system whereby they can instantly send the invoices. So what are they doing? They are creating an invoice which is taking 3 days, then dispatching it again 3 days. It takes 6 days to reach that invoice to the customer. I mean, a sheer waste of 6 days. Just imagine if you have 1 crore rupees in your bank account, such companies may have that much of. So if I have six, or in other words, I will say that 1 crore rupees of debtors are outstanding for 6 days because of just this process. Then is a huge opportunity cost that I am sitting upon, right? I could have made some profit if that money could have come to me. So we need to reduce this particular, obviously, uh, lead time as well in between. There have also been instances of the invoices being misplaced or not being received at all. So it's not like all the invoices that they are sending will be reaching to the distributors on time. There are instances of misplacement of the invoices as well. I mean, this will further add to the lead time. Only 30% of the account receivables is collected within 30 days. On an average, the account receivables collection period is 50 days. You see, so they are giving 30 days of a credit, but customers are not paying in the 30 days. Instead, customers are paying in 50 days. So what is happening? These 6 days are getting waste on the way itself. If company can find out a way to reduce these 6 days, the average collection will reduce from 50 days to 44 days itself. Okay. So this is an instant reduction, improvement that the company may feel. And then on top of it, there is another thing. If somehow we can bring something else, like to give maybe a discount as well if somebody is paying. So you see, if from 44 days, even after this particular thing, so what can happen if company can launch an e-commerce website, some billing, online billing system, right? Can do the invoicing through mails, etc. So that they can reduce those 6 days. That is one way. The second is if we have like 50 days, we reduced it to 44 days. And what if I'll start giving 1% of discount? So that 1% will help me fetching my money 14 days earlier, right? If not then. So if the customer is paying on the 30th day as well, I will still be able to reduce my 44 days average credit period to 30 days. You know what will happen? I'll start saving 14 days. Again, the example that I took, if 1 crore of debtors are outstanding for 14 days, there is there may be a better kind of a situation to give them 1% discount so that they all can pay me. Okay. Fif- The account receivable collection period is 50 days. PTPL does not charge any interest. Obviously, why? The same reason. If the company is sitting at 44 days credit, even after providing 30 days of credit, the company has to analyze their debtors. They need to understand what are the debtors, or they may need to come maybe some kind of milestone kind of a program whereby they can definitely ask like 50% can be done in 15 days or so, or maybe the next order, one order can only be there which is outstanding. The next order can only be processed when you will be giving or taking the last bill's payment, or maybe three bills can only be pending. Like, they need to understand the market and behave accordingly. What is being offered by the 50 days to 30 days without creating any acrimony with distributors. Okay, so they don't want any friction with the distributors. They are like, distributors are also happy, and then you are able to reduce the timeline. So I'll give you some examples, right? So speed up the billing process. Okay. Increase the control over the misplacements of the invoices so that at least those instances can be put in penalties over them. If you will give incentives, they may be kind of motivated to make the early payments, right? Understand the consumer behavior. So I mean, this is all what you can cover in this kind of a question. So you see, there are a couple of suggestions the question has given, like revisit the credit period extended. Do you really think 30 days is something that you need, right? Maybe look at the customers competition. There might be competitions which are asking for advance payments as well. I mean, this is the brand value. I mean, what a beautiful thought it is, but this is so true. I've seen in the average credit period is sitting at a very high kind of a pace, while in the same industry there are some companies which are not even of A1 into their store. And if the company is saying, I will not deliver it to you without that, I need this brand, then your retailers and distributors, they are always having better negotiation powers, and then they will always put you in a difficult situation whereby you can face a higher credit period or maybe at times bad debts as well, which is happening in this situation. Okay, so we need to revisit the credit period. Better distributor relationships, obviously. If the relationships are good, then people pay you well. Credit analysis of the distributors. I already explained this. Multiple channels of settlement, which may be Paytms, UPIs, bank settlements, or probably this uh, transfer machines can be there. I mean, there are multiple ways through which you can receive the payment, or you can provide some discounts on early settlements. Okay, the next question is also if we recoup the entire. So Mr. Kumar is saying, who is the CEO of the company, they are saying this 10% of the account receivables, that debt is happening. So he is saying if we recoup the entire account receivables, that is there are no bad debts. It also means that we are profitable. So Mr. Kumar is saying that we can make profits if bad debts are not there, which is wrong. Profits and obviously bad debt is an expense, but bad debt is not the only expense in the P&L. So if I am able to control the bad debt, but my margins are still shrinked, I'm still not able to charge premium from the customers. I'm still not able to recover my cost. The way we have seen in the previous kind of an example, the target 10% was not achieved. Then in those cases, controlling bad debts will not again only result company making profits. Okay. So, I mean, this is a wrong statement. So, critically analyze this statement and illustrate whether it is always true or not. So, you can explain the same situation, the question that was there, right? So, 400 rupees was the selling price, and then they were targeting around 10%. So, you can take the example from the above questions as well to explain the situation. And then if you want, you can create a situation that distributor A and B, and then what is the kind of margin. So to explain that the other expenses are also impacting the profit, it's not the only bad debt. And then you can conclude. So simple, right? So I mean, what you need to do is like the way I explained you to answer. You will be explaining the whole situation first, and then the second thing is taking an example. This is the situation, this is the example, because in this case provisions are not applicable, otherwise you would have given some provisions here. And then the third para is basically the conclusion, linkage basically between the para 1 and the 2, and the last one is the conclusion. So this can be a one line or two line answer as well, the conclusion. This is you how you write the answer. Okay, with this we have come to an end to this particular case study. What we will do actually, and Pranav, even though I have answered your second question, for your first question, what we will do, I'll try to wrap up the second case study little earlier so that we will have last 10-15 minutes to to discuss about the approach and all. And Deepak ji will also join us because he's from the ICAI's background. So he will also have some insights, some inputs, which will definitely add some more values on how to address these IBS kind of exams. So we will address this in the last 15-20 minutes, and we are right now taking a small break, maybe a break of 10-12 minutes. Let's join back on 2020, I would say. That's a good number to join back. Okay, so see you all at 2020. Okay, the technical team, I'll request we can announce a break for 12 minutes. Thank you. of day two, today's day. I'm just quickly sharing my screen. I hope it is visible.
Yes, sir.
Perfect. So the like we have covered the first case study, which was more or less about the tea industry. The second is about the textile industry. So second is we are talking about industry where by somebody is crafting t-shirts, and then I'll tell you, like in this industry, what happens actually, the government provides a lot of export incentives. So you see the whole of the northeastern part, I would say, or the eastern part was mainly involved in this kind of a setup, and that's why Bangladesh is a very big kind of textile exporter. So when we are talking about this particular industry, at times the margins are so shrinked over here because there is a lot of competition that goes into. So what happens in these kind of situations? Uh, at times, companies are running the whole of the operations only on the basis of the export incentives that are received from the government. So companies are ready to sell their products at cost to cost basis as well, because they know there will be some profit, some refund, some kind of return they are going to get back from the government, and that refund may become their profit. So that this is kind of an industry that we are talking about. Okay, let's go and see this particular case study or a kind of a situation of a client as I discussed in the first case study as well. Let's see what is that your client is going through and then what is exactly that they want. So there is a company which is established in 2003 known as RP Limited. This is based in Tirupur, Tamil Nadu, India, and has established a foothold for itself as a prominent manufacturer, wholesaler, and exporter of high quality t-shirts. So they are into the t-shirt industry. Recognized as a prestigious export house, RPL takes pride in its brand RK. So this is the brand name with which they are operating. RPL boasts a state-of-the-art manufacturing facility equipped with advanced technologies and machinery. So remember, they have their own manufacturing facility as well. Their production process adheres to stringent quality control measures, ensuring every RK t-shirt is crafted using premium materials and delivers exceptional durability. Okay, this is very, very important for any brand to settle up to have that. Like in the first case study when we discussed about with the right brand image, you can gather you can ask the customers to pay premium as well, because then the customers will not pay the prices as per your go to market kind of a strategy, but they will pay the prices as per the perceived value theory. They will, when they will be paying the price, they will be thinking that they are paying the price because of the quality, not because of the worth of the product. Okay, so that's why there is a very kind of a strict requirement of adhering to the standard stringent quality controls which this company is able to set up. And that's why they may be working as a premium brand owner of this brand known as RK. The company's dedication to quality has not only earned them the trust and loyalty of their domestic clientele, but has also established them as a reliable and sought after supplier in the international market. You see, quality is speaking it itself. So, companies, product, and the quality is itself speaking. Understanding the evolving preferences of their customers, okay, customer behavior. You see, most of the products or the companies which are out of the business, the main reason for most of the companies which ran out of the business is that they are not able to understand the evolving preferences of the customers. Like to give an example, which is very famous in the industry, like when we talk about Nokia itself. When we talk about Nokia, we always say that the customer behavior, the consumer preference was changing. People were trying to shift the customers, the whole segment of customers was shifting to Android kind of models. Smartphone was something which was newly brought into the market, but Nokia was not able to identify the evolving customer preferences, and there was a cost that Nokia has to bear for that. RPL offers a diverse range of t-shirts. Their product portfolio encompasses a wide variety of styles, color and designs, catering to diverse demographics and fashion trends. They prioritize innovation and constantly update their collections, ensuring their brand stays ahead of the curve and caters to the ever-changing needs of the t-shirt market. You see, I mean, even though this is not the case study related to one of the brand, but this one brand launched by Tata Group named as Zudio is doing amazing in the kind of a market. So they are able to understand the customer preferences. They are able to understand the economy of scales, how you see at a working or manufacturing at a bigger level can bring economy of scales, and then they are able to establish as a very good product in the market. Looking ahead, RPL is committed to sustainable growth and expanding its global footprint. They are actively exploring new markets and forging strategic partnerships to broaden their international reach. Additionally, they are implementing eco-friendly practices throughout their operations, prioritizing responsible sourcing and sustainable manufacturing processes. With a focus on continuous improvement, innovation, and ethical practices, RPL strives to solidify its position as a leading player in the global t-shirt industry. So they are not only targeting to be a domestic leader, but they are now thinking about the globe as a market. Which in the last case study as well, I explained that when the company starts thinking about the market penetration, first they think about maybe the locality, the city preference, then the state preference, then maybe the India as a market preference, and then they start talking about the international markets. That's how the companies grow. So the growth strategy, how the company is planning to grow is on 23rd April 23, RPL enters into a contract with JM Limited. So JM Limited is another company to sell t-shirts for 600 rupees per t-shirt. So they came into an agreement, they signed a contract, an agreement with the JML saying that we'll be selling t-shirts for 600 rupees to each t-shirt to you all. As per the terms of the contract, so JML, since now a contract is signed, they are negotiating prices. So they are saying if we will purchase more than 2000 t-shirts till March 24 within a year, it means if my total purchase from you will be more than 2000 t-shirts, then the price of each t-shirt retrospectively. So it means even the first t-shirt that I bought, the moment I bought it, it was 600 rupees. But if the moment I will be able to cross 2000 as a quantity, the price of the first t-shirt will also be revised. It will also be reduced, right, to 540 per unit. Till September 23, RPL sold 190 t-shirts. Now you see the agreement was signed on 23rd April, and till the September, which is like the half or the midway of the year, they are only able to sell 190 t-shirts. It means what happened? Only 190 t-shirts were purchased by JML. RPL estimates, so they were estimating that with this speed, 190 t-shirts in 6 months, just to give an example, they believe that they will not be able to purchase 2000 or more than 2000 t-shirts. So this is what the RPL estimated. But what happened? There is a change in the strategy. So JML, they also acquired DC Limited, which is another third company, with the help of DCL Limited, acquisition of DCL Limited. So now they have two companies. They are selling the products in different territories, to give an example. And from October to December, so till September, only 190 t-shirts were sold. But from October to December, in the next 3 months, what happened? RPL sells additional 1200 t-shirts. So in the 3 months, they sold 1200 more t-shirts, making it to total 1390 t-shirts. And with this speed, now JML will definitely be able to cross the target of 2000 t-shirts. Okay. So RPL estimates that purchases of JML will exceed 2000 t-shirts threshold for the period, and therefore it will be required to retrospectively reduce the price per t-shirt to 540. So initially, you see, in these kind of situations, When we are doing our sales, we are doing the sales with the best estimate. So when we are selling something, let us suppose we made some sales in April, we will book the revenue with the price of 600 rupees. The moment we will get to know, let us suppose in December, we now the estimate says that the 2000 will cross. So what will happen? I will book the revenue with the new rate for the new sales that I am making, 540 rupees, and I will do the retrospective adjustments of the previous sold inventory. So whatever revenue I booked at 600 rupees, I'll have to reduce that to bring it again to 540 rupees. Okay, so this is the kind of situation that we are in. RPL is analyzing a strategic move. So this was the first situation. The second is now RPL is thinking that JML, okay, now you see JML is doing good because JML has acquired DCL, so they are a big company now. So now RPL is thinking, what if we will acquire JML? I mean JML plus DC. This decision is driven by the potential for significant synergy benefits that could propel RPL's growth and the market position. The synergy between the two companies can be multifaceted. Firstly, combining their manufacturing capabilities could lead to economy of scales. This is what I gave an example of Zudio that I mentioned. Economy of a scale can be there. Sharing resources and expertise could optimize production process, potential reduce cost and increase overall efficiency. That's how the companies, if you can recall in the previous case study, I told you, if you are expecting the sales will increase, then the overhead cost per unit will reduce. Okay. Generally, the overhead cost is made up of generally either it is a semi-fixed cost or we generally call it like a step up cost. That to a limit it will remain same, and the moment that limit will be crossed, there will be a new limit that will be there. So this is the step up cost. So the more the units that will be manufactured or sold, the lower that step up cost will be at times. Okay, so they believe that with the merger or acquisition of JML, they will bring some economy of scale and have better efficiency. These are the data which is this is the data which is available. So right now RPL's after tax earning is 10 crore while JML is earning 3 crores. Number of equity shares are 10 lakh in RPL, and JML they have 2.5 lakhs. Market price per share is 75, and for them JML it is 60. So this is the current economics. Uh, it is proposed that certain changes in the shareholding of the JML would be made in case of consolidation, as per the discussion between the management of the two companies. During the course, okay, so this is acquisition of JML. This is the second situation. The next situation is that during the course of audit of RPL, CA Devanshi Best is verifying export revenue of the company for the year 23-24 with her engagement team. So audit is going on now, and the auditor, which is CA Devanshi Best, she is doing the export revenue verification with her engagement team. She has verified transactions entered in the export sales account maintained in the accounting software from relevant export invoices. The export sales are being made on payment of ICST, for which a refund is automatically credited in the accounts of the company after the goods are shipped. So very important that when we are making the sales, we need to pay the IGST, but the moment we will be able to sell it, this will be the IGST will be refunded by the government. It will be automatically credited in the account. So I told you in the beginning, at times companies consider this refund as the profit itself. So they sell the products at cost to cost to survive in such a highly competitive industry. And during the COVID, it was kind of a very bad situation for these companies because the export incentive was impacted. Government took a decision which ended up reducing the export incentives, or in some cases deferment or stop of the incentive. So it actually ended up impacting this industry in the worst possible way. So now you see, on inquiring from the internal audit staff regarding the recognition of the export revenues, so now the auditor is inquiring. You see, when an auditor is doing the audit, there are various ways. Okay, so they do the audit. So the couple of the ways that I will be telling you, they will definitely do inquiry. They will be observing. So inquiry will be there, observations will be there, re-performance will be there, right? Recomputations can be there. There can be like test of details will be happening, analytical reviews will be happening, and these are the a couple of combinations. Confirmation procedures is one of the combinations. So these are the all combinations which will help auditor getting a certainty. I'll not say certainty, but the reasonable assurance over the financial statements, whether they are free from material misstatements or not. Okay. So while in doing an inquiry with the internal audit staff regarding the recognition of the export revenues, she is told that export sales are recognized for the year on the basis of bills of lading. Okay. So the company is, the company is actually recording the revenue in the books on the basis of the bills of lading. Bills of lading is a document which is provided by the shippers or the shipment companies when they receive the goods. Okay. It is like I will say it is like a invoice raised by the shipping company that your goods have been received or they are on the deck. They are stored on the ship. Now, this bill of lading can be a good document, but then we need to understand what are the terms of sale. If the terms of sale are free on board, okay, then this bill of lading can be a relevant document to recognize revenue. It means the risk and reward of the revenue will not transfer until the goods are placed on the deck. But if the terms of the sales are, let us suppose, X work. X work means as soon as the products will be outside my factory, I will recognize the revenue. Because if the products will be lost during the transport, during the commutation, let us suppose there is a commutation happening from factory uh, to the port, and something happens to those goods in between, then what will happen? If the risk is related to the customers, if the customers are supposed to take care of that particular environment, then company can recognize the revenue as soon as the goods are dispatched out of the factory. Okay. Or if the terms are FOB, the revenues can be recognized once the bill of lading is there. If the terms are CIF, it means the goods, even if they are on the way, they are in between the ocean, let us suppose on the closing day, the company can still not record revenue in their books. So, I mean, the terms of the revenue and in the same manner, the terms of the purchases plays a very big role, very big role. As an auditor, we need to be very careful what are the terms of the sale. I hope you understood this. So, the company is recognizing the sale on the basis of the bills of lading. However, she is not convinced with such a
Yeah.
response.
So I have a doubt regarding this. You explained that the bill of lading should be checked based on the terms.
Mhm.
So can you just once again give a glimpse of that when that revenue to be recognized in case of FOB, X works and CAF or C and F?
Okay, I mean, that's a very valid question. I try to explain, but since we are not using any dashboard or something, so just try to understand. I'll reiterate it. It is a very important concept. During the audit, we have come across many such differences, discrepancies, whereby we have revised or we have asked the client to reverse the revenue as well. I'll try to give you an example. Like, let us suppose the terms of the sales. So I am dealing with a US client, let us suppose, and I am exporting some goods to the US client. Now, when we signed an agreement of sales, we wrote down in the sales agreement that the risk and reward will be transferred as soon as the invoice will be ready. Try to understand. I'm just giving you different scenarios. So the moment invoice, I am invoicing those bills, even if those goods are in my godown and something happens to those godown, those stock, that will be a loss not of my company, but it will be a loss of the customer because the risk and rewards have been transferred the moment the invoice is made. In the same manner, if my customer agrees that it is not the invoicing, but it is the dispatch or X work, we call it. X work means work is factory. So the moment my goods will be out from my factory, the risk and reward will transfer. It means my sale will be dependent on the event of out of factory. So even if I have made a bill on 31st March, but my goods were within the factory and the goods were dispatched on 1st of April, then it is not the sale of 31st March. It is the sale of 1st of April. It means next year's sale, right? In the same manner, if let us suppose the terms are FOB. So on 31st March, I dispatched goods from my factory. I have, let us suppose, made invoice on 30th, dispatched goods on 31st, but the terms were free on board. It means if the free on board, the shipping document I received bill of lading on 1st of April, the sale will be recognized on 1st of April. If the management has recognized the sales on 31st of March because they dispatched the goods, we will ask them to reverse the sale because the sale belongs to the next year. In the same manner, if it is a CIF, okay. So let us suppose on 31st the bill of lading issued, but the goods are sold on the CIF basis. And on the closing day on 31st March at night, the goods are somewhere in the middle of the ocean. They have not reached to the destination. It means the risk and reward is still not transferred. If something will happen to those goods, it is a loss of my company because the terms of the sale are CNF, I mean CIF, right? So in those cases, I cannot recognize the revenue. So what will happen? I mean, just giving an example, if I'm sending goods, but I can't recognize sale, then I will book sales in transit. And the same, vice versa, is same situation is possible when I'm doing a purchase as well. Okay. So I need to be very careful. What are the sales of the terms of the sales? And then I need to see on the day, the final day, the closing, the midnight of 31st March, what is the status? Should I recognize the revenue or should I not? Okay. Is it clear? I hope I tried to explain it in detail.
Yes, sir.
Okay. Perfect. And this is what happens during the cutoff testing. If somebody will ask you in the audit, we have a very famous, I will say, a kind of a procedure which is known as cutoff testing. So what we do, we take last 5 days, 7 days, depending upon the cycle of the company. What is the business cycle? How much time it takes for the company to recognize the revenue? So we take those many number of days as an example, as a sample, and all the sales happen during those days. We see what is the actual moment or the day on which the risk and rewards were transferred as per the sales terminologies. And any invoices or any sales that are recognized by management which are not delivered within the this particular cutoff period, we ask the management to reverse all that sale and book in the next year. Okay, so maybe the invoice is of 31st March, but still we will not allow the revenue to be booked on 31st March. The revenue will still belong to the next year. So that's the procedure of cutoff testing, which comes from matching concept. I hope in accounting you understand there is a matching concept which goes like the revenue of the 1 year should be matched with the expenses of the same year, or vice versa. I mean, the expenses of the 1 year should be matched with the revenue of that year.
Yes,
So right? So, however, she is not convinced. So now the auditor is confused. So they are saying we are not going with the bill of lading because maybe the terms, sale terms are the moment the goods are dispatched. So the goods are out of my factory, we will recognize the revenue. So the auditor is of an opinion that we should not be doing it on the basis of the bill of lading. However, she is not convinced with such a response and feels that the same does not appear to be proper. She finds that four export invoices bearing dates in the month of March, having a total value of 125 lakhs, have not been recognized in export revenue on the ground that bills of lading for these invoices were issued in the month of April. Now you see, the problem is there are four invoices dated 31st March. To give an example, this can be 31st March, 25th March, 27th March. Let us suppose you are doing the cutoff testing and then you came across these four invoices. Total sales is 1.25 crores. Okay, 125 lakhs. Now the bill of lading is generated in April. Okay. So the company is saying that since bill of lading is generated in April, we will book this as the revenue of April. As an auditor, you are not convinced because you are thinking that the sales terms are X work. The moment the goods are out of factory, the revenue should be recognized. Why? Because you see, just read this. The export sales are being made on payment of IGST. When you created an invoice, the IGST is due. So you are already paying the IGST, and the moment it will be dispatched, you will get the refund of IGST as well. So in which return you will be showing this sale to the IGST department? In the March return or in the April return? The company will definitely say that we are going to show this sales in the March return, so that they can get the refund early. So if you are going to show it as the sale in the IGST kind of a return for the March month, then it should be recognized in the March only. You just cannot have two different practices. So that's why auditor is little confused. Further, during audit of the current year, CA Devanshi had identified that there was a misstatement also in the last year pertaining to the export revenues of the company, and the same is still not corrected. So when she realized that this year this has happened, she instantly realized that the last year also the same thing happened, but she didn't notice it. So it may happen that the auditor may come across something during this year which was applicable for the previous year as well. But in the previous year, she issued a clean report in the last year. So now she is little confused. In respect of, okay, so this is how it is. So maybe a question will be there in relation to this. The next situation is that in respect of its Japanese exports, the company has also done some exports to Japan. On 31st March, RPL has an export exposure of Japanese yen, 10 lakh receivable. Japanese yen is not directly quoted against Indian rupees. So there is no direct trade that is happening between INR and JPY. So we are using a common currency which is US dollars. So on the current spot rate means today. $1 is costing how many INRs? 62. In the same manner, $1 is costing how many INRs? Japanese yen is 102.34. This is the spot rates. It is estimated the Japanese yen will depreciate to 124 level and Indian rupees to depreciate against US dollar to 61. So my estimation, the management estimation says that Japanese yen will be 124 and US dollar INR will be 65. So from 62 to 65, from 102 to 124, the both will depreciate. But forward rates, so this is my estimation. But today, if I am getting into a hedging contract, into a forward contract today, then what I'm going to get the rates is 66.5 and 110.35. So if I'll enter into an agreement with the bank, I can get the my receivables, this 10 lakh receivables with this rate 66.50. While my risk is that this may depreciate to 65 rupees. Okay, so this is how it is. So these are the forward rates. Now CA Devanshi recommended that taking a forward cover in such situation would be beneficial. So this is a recommendation. The next situation is on 31st March, RPL has an outstanding interest liability of rupees 1 crore towards loan payable to BFCI Limited, a public financial institution. So on the same day, it issued debentures to BFCI Limited in lieu of the outstanding interest and deducted the said interest while computing profits and gains of the business. So what happened? There was some debenture interest that was there due, and instead of making the payment of that interest, what we did, we issued more debentures and we claimed this as a deduction. So the assessing officer, however, rejected the deduction of the interest on loan claimed by the RPL because it is not actually paid. So assessing officer has done that. After the issue of such debentures, the company has a total debt of 3 crore of debt is there. Surplus fund to the tune of 5 crore that is available. They have made a profit of 18 crores and there are indirect expenses for 4 crore rupees which are there in the financial statement year pending. So this is the background of the whole of the question. So there are multiple facts that are being covered and I'm pretty sure on each aspect that we have seen, there will definitely be a question that the case study will be asking. So let's start going through the questions to explain them one by one. The first question is, with respect to the information given if the merger goes through by exchange of equity shares between RPL and JML and the exchange ratio is set according to the current market price, what is the post-merger earnings per share of RPL? Post-merger earnings per share, EPS, but after merger. I'm in a very simple kind of a situation. You see, in this equation, what has happened? If the market price is taken into consideration to issue the shares, we'll definitely see what is the total market price of JNL. 2.5 lakhs multiplied by 60. My market price share is 75 rupees. So how many shares I need to issue is 250 into 60 divided by 75. That will be the additional number of shares that I need to issue to settle this. Okay. So this is the kind of an answer. So 2.5 lakhs multiplied by 60 divided by 75. So 2 lakh more shares. This is what I need to, as an RPL, I need to issue to the JML's shareholders. Now these 2 lakh additional shares will be there. So I am already sitting at 10 crore, 10 lakh equity shares. By issuing 2 lakh more equity shares, I will be sitting at 12 lakh equity shares. Now I will have 12 lakh equity shares and the profit will be 10 crores plus 3 crores, 13 crores. So my EPS after merger will be 13 crores divided by 12 lakh shares, which is 108.33. So you can clearly see there is a benefit that has happened because my earning per share earlier was less than that. Okay. So 10 crores of earning and number of share equity share is 10 lakh, which means it is 100 rupees only. Earlier for IPL, EPS was 100 rupees. Now it has increased to 108. Just kind of, like try to understand the EPS is 100, but the market price is 75. It means the beta, the risk which is there, it must be 0.75. I hope you understood this as well. That's why the market responds not only to the earnings but to the betas as well. I mean, or we generally in the local language, or I mean regular or common language, we call it a multiplier as well. Okay. So this is the correct answer to the question that we were just looking into, 108.33. Second question is basically with respect to the information given, certain adjustments would be required to be made to the account for the change in the shareholding of the chairman in case of consolidation. These adjustments are known as memorandum adjustments, current period consolidation adjustments. So understand, memorandum adjustment is basically a top-up entry which happens. So what happens at times, we need to do, let us suppose, start to gap kind of reconciliations or some consolidation top-up entries. Okay. So if a group or a bigger client is there and an MNC is there, what happens? They are preparing group books. In the group books, there are some transactions which might we need to adjust at a group level. To give you a simple example, let us suppose there is an expenditure that happened at a group level and then they did some allocation of that expense to the subsidiary levels. While putting the groups consolidated accounts together, now this is not making sense that the expense which is there is sitting in respective subsidiaries books of accounts as well. So you may make a top-up entry to reverse what is being allocated already and to book it in the main kind of a books, even though this will not create a major difference because it is just like an allocation, pure allocation. But there can be some, let us suppose one subsidiary is there in the India, the other one can be in Australia, and then my group company is sitting in USA. What may happen is like we have done some transactions at India or Australia level, which might not be relevant for the US level. So while doing the consolidation, we need to make up some top-up entries. That is known as memorandum adjustments. Current period consolidation adjustments. This is very simple. I mean, some adjustments making at the consolidation time. Then we have permanent consolidation adjustments. This happens when we are acquiring someone, mergers are happening because this is one time a kind of a permanent adjustments. This is not something every year I'll be doing those adjustments. And the D is temporary adjustments, which can be like a regular adjustments, which are just temporarily sitting there, maybe depreciation differences, etc. So in this equation, this is going to be an acquisition, so it is a permanent consolidation adjustment. With respect to information given, guide CA Devanshi on the audit opinion, considering the fact that the last year's misstatement pertaining to export revenue has been identified in the current year and unmodified opinion was issued in the last year. So if this is a situation and the auditors comes to know about this kind of a situation, what they need to do, they need to issue the qualified opinion to tell that this is what is not correct in the book. So in the third kind of an option, the correct answer is CA Devanshi should express a qualified opinion or adverse opinion in auditor's report of the current period financial statements, modified with respect to corresponding figures included therein. Okay. Next is, with respect to the information given, comment upon the validity of the action by the assessing officer on rejecting the deduction of interest on loan claimed by the RPL. While reading or going through this particular statement, I did mention that what we need to do is this should not be allowed. The interest so converted into debentures and not actually paid shall not be deemed as actual payments and hence would not be allowed as deduction while computing its profits and gains of business for assessment year 24-25. The action of assessing officer is correct. So this is the answer. There is a very, I will say my personal question, favorite question, which I generally used to ask when I was a manager to the staffs that I used to hire. And this question was, if there is a transaction, let us suppose we have issued shares against purchasing a building, right? Then how will you deal this transaction? How will you treat this transaction in the cash flow statement? And there were a lot of people who used to get confused because of the lack of experience and all. Somebody used to say like this is generally the answer was like this will be added in the investing activities and then it will be a part of the your financing activity as well because of the issue of share and the purchase of the building. But the point is basically there were few people who always used to answer by saying that since there is no cash involved, this will not be treated in the cash flow statement. It will remain outside the cash flow statement because there is no cash involved. So the first answer is obviously not correct answer. The second is a good answer, which is the correct answer that this will remain outside the cash flow statement because there is no impact on the cash. It's not a cash transaction that is happening. But the answer that I used to expect is basically that these kind of transactions are not possible. We should not be promoting or it will be difficult. I mean, we'll not be able to see these transactions in practical life. The reason what happens actually, you see, uh, there is a medium of exchange, right? Kind of a concept. All the medium of exchanges that we are talking about, they are being considered by RBI. They are being regulated by the RBI. But when we are dealing with the assets are actually regulated by the SEBI, stock exchange market, right? So it is not like RBI. So we have two separate regulatory bodies. One side we have an RBI which takes care of the medium of exchanges. It talks about what can be a medium of exchange, what is exactly appropriate for doing transactions of sale and purchase or settlement of various transactions. The other side, your SEBI regulators, they control all the assets which are there in which you can deal, in which you can trade. So when I'm purchasing a building by issuing shares, building and shares both are assets. So they are out of the purview of RBI. The medium of exchange is not possible in this scenario. What we can do is issue shares against cash or some medium of exchange, and then we can use that medium of exchange to buy a property. This should be the appropriate answer. Okay, and maybe that's another reason, just to add on to the knowledge of all the participants, that maybe this is the bigger reason why crypto is still not regulated in India. We are still struggling because we are not sure whether this should be launched in India as an asset and regulated by SEBI, or we can launch it in India as the currency, as the medium of exchange, which can be regulated by the RBI. So whenever we are talking about the cryptocurrencies white paper, the paper is moving from one department to another department. RBI is pushing SEBI to regulate this under the stock exchanges, and SEBI is pushing the RBI to do it in the medium of exchange basis, and there's a tug of war which is happening because of which it is not regulated. But yep, yes. So this fourth is basically since we have not made the actual payment, so it is not allowed. Next is, with respect to the information given, calculate the equity value of RPL if the applicable EBITDA multiplier is 4. So we have equity value. We need to calculate the equity value. So there is a lot of information which is already given. You see. So we have the company has a total debt of 3 crores, surplus funds to the tune of 5 crores. Further, it has made gross profit of 18 crores. So all this information, along with we have some market share and that kind of an information is also given. So what we need to do is we need to calculate the EBITDA. The 18 crore is the total value minus 4 crore is already which is given in the question itself. 18 crore is the gross profit, 4 crore of the expenses. So 14 crore is basically the EBITDA. Multiplier we are saying if we need to do the equity valuation, the 4 is the multiplier, so it is uh, 56 crore is the capitalized value, but we then have debt as well of 3 crore and we have surplus fund which is like reserves and surplus 5 crore, so we will add that back and the equity value will be calculated accordingly. So the equity value in this question is 58 crores. This is how you calculate the equity value of any company. Just a minute. Okay, now we are moving to the descriptive questions. So the descriptive questions, the first question is with respect to the information given, analyze and state how the revenue should be recognized in respect of the sale of t-shirts by RPL to JML. While going through this particular situation, I already explained how this will be recognized. So when we are in April, what will happen? We don't know whether the sale will cross 2000 units or not. So the best projection the company will took, and considering the sales that they made initially, they know the projections were like these 2000 t-shirt sale will not happen. So they will not need not to give the discount which was written in the contract. So they will recognize the all sales at 600 rupees. But the moment after the acquisition of DC Limited, JML started asking for more t-shirts, and our company RPL is able to have the right estimation. They know that the number of t-shirts will cross the target units, then the revenue will be recognized at 540 rupees. And since the agreement says, the contract says that this is the retrospective change, it means the first t-shirt which is purchased will also be adjusted to uh, bring down to the 540 rupees. So it means any revenue which is recognized in the previous months will be revisited and the adjustments will be taken in the appropriate period. So this is how you will do it. So I mean obviously you can refer the question solution given to see how to draft it, but you are all allowed to write in your own words. The crux will remain same, that you will have to recognize these 190 recognized at 600 rupees earlier, and then at a later stage you need to adjust for this. So 190 t-shirts for 60 rupees, this is the gap of 600 and 540. You need to adjust this revenue. So you need to reverse this revenue. So you will book the sale of 1200 t-shirts, right? This is the second phase, October to December quarter. This will be the revenue that will be recognized, but you will take the impact of the reversal of previous sales as well, because now the estimates have revised. Okay. Next is with reference to the information given, discuss from what sources CA Devanshi can obtain reliable audit evidences in respect of the export revenues, particularly for the 4 export invoices for the current year. How can she challenge management's assertion regarding the completeness of export revenue? So the management is thinking that they have completed the revenue, while the 4 invoices are booked in the next year, in the financial year 24-25. Why? Because they personally believe that the bill of lading is created or they receive the bill of lading in the April month. So this revenue should be of the April month, which is again not the correct observation, which we discussed. So I gave you one example like the IGST sales and the refund claim. So they can definitely go back to the management and ask that in which month the IGST is paid, in which return, whether March's return or April's return, these sales will be a part of. And since the company is already seeking the refund from the government, they will definitely cover this in the March month. And if they are covering this in the returns in the March month, then it has to be a part of the March month. Saying this, the assumption here while concluding is that the sale terms are not dependent on FOB. So we are not saying that the sale should be recognized on FOB basis. Maybe after going through the question, it seems like the sales terms are X work. The moment the goods will be out from the factory is the moment the company will be recognizing the sales. This is an assumption that we have taken. Okay, so this is all written over here. E-way bills generated on the portal would proceed. So you see GST returns and all. So the e-way bills that there is a stage after which there is a limit after which you have to issue only e-way bills. So if you are generating e-way bills on 31st March, it will automatically become the sale of the March month's return. So you can take these evidences and then you can go back to the company and tell them that you cannot treat the same invoice into different segments differently. You cannot say in IGST or GST returns that it is March sale, and while the books of accounts you can say this is April month sale. This is not allowed. Okay. The next question is, which is the last question. Again, a very simple question, but let's go through this. The direct exchange rate is not available between the yen and the INR. So what are they saying? They calculate the expected losses if the hedging is not done. How the position will change if the firm takes forward cover. So what are the expected losses? First of all, we will see. So what is the current rate and then what is the estimated rate? So my current rate is basically that I have taken the dollar basis. So 62.22 divided by 102.34. So this is the current rate 0.6080 for Japanese rupees. So this is the yen. This is the exchange rate of the yen. So this is what I am expecting from the basis of spot. Okay, so 0.6080 is the spot rate. Expected rate of yen for March. So this is the expected, right? 65 divided by 124. This is what we thought. So this will be 0.5242. Listen, this is the receivable. So right now, today, I am going to receive something at this particular rate. While if I'll wait, my estimation says that the price will reduce to 0.5242. It means there will be a loss. So how will I calculate the loss? The 1 million yen's value today is 6,08,000 rupees. If the rate will further decrease to 0.5242, the value of the sale or the collection will be 5,24,000 rupees. 83,800 is the loss. Okay, this is my current estimated loss. But if I will enter into a forward contract with the bank, then I'll have the forward rate at 0.6026. So even though the current position will remain same, but I'll be able to fetch this much 602 600. 5400 is the loss if I'm entering into the forward contract. So by entering into a forward contract, I can reduce my losses from 84,000 to 5400 rupees. Okay. In this question, one thing is silent, which is practically not possible. Like every time I'm entering into a forward contract, there has to be a forward premium that I need to pay. And that forward premium will also be something which will be really relevant to consider while doing this calculation of net losses that I will have after doing hedge. Okay, so this is how you do it. The second part of the question says if the spot rates on the March 31st, 24 are INR per US dollar this and Japanese per yen this, the decision of taking forward whether it will be justified or not. Again, the same calculation you have to do with these dates which are supposed to be changed. spot rates, right? So if you do the same calculation, I mean the exchange rate will become 0.5977. So right now the spot rate is same. The estimated will change to 597. So even in this case, you are still have sitting at a loss of 10,000 rupees. But by taking a forward contract, you will only have a loss of 5,400 rupees. So it definitely makes sense to get into a forward contract, to enter inside a forward contract until or unless the premium that you will be paying to enter into the forward contract is less than the difference or less than the saving that you are having by entering into a forward contract. Okay, if the premium is higher than the saving that you are having, then it will not make any sense. Then we will not advise the client to enter into a forward contract. Okay, I hope it is clear. I'll be happy to have any questions if anyone wants to ask. I would request technical team. Deepak ji is also here now. So Deepalji, even though I'm trying to address one of the question, I can't see it in the chat box now, but there was a question that I can recall, and I will like your insights as well, your values as well. It was the question related to how to appear for IBS exam or how to, I mean, when you are preparing for it, what are the things that we need to take care from a perspective of board of studies. So if you would like to spend 2 minutes to tell students on how to prepare or how to appear, it will benefit them. So over to you, Deepanji.
Okay, thank you, sir. On behalf of everyone here, I would like to sincerely thank CA Amit Rathod sir for taking time out of his busy schedule to be with us today. We truly appreciate the way you communicated with the students and explained the concepts in a very detailed manner. Uh, Now, students, sir, if you want to leave, you can leave, sir.
Uh,
Now, I will take care.
Acha, Deepakji, just give me a minute. I'm sorry. I'm just quickly checking some messages here. I just don't want to leave any messages which are not answered.
Hmm.
So, good evening, sir. Can you please explain the pricing terms, going rate, perceived value? I think Abhiram, I explained this. Do you want me to again explain this? So I covered going rate, perceived value, and I covered accelerator, startup, and incubator as well. I hope it is clear now.
So that accelerator and startup, can you just repeat once again?
Okay, so accelerator means you see something accelerate. What is accelerator's job? Accelerator's job is to accelerate things. Okay, it means increase the speed of the things. So I'll give you a quick idea, quick kind of an understanding. So let us suppose you have something in your mind that you have an idea. You think there is a problem in the society you can solve. Now you need somebody who can help you, sit with you, and can, I mean, vet that idea whether the market acceptability will be there or not. You need an incubator. Incubator is somebody, what is incubation is basically putting something, giving that environment to that idea so that this idea can grow up. So incubator comes at an idea stage only. That I have something in my mind, but in reality that is not there. So I need somebody to come and help me. That is not known as incubator. What is an accelerator now? Now this idea is actually practically there. So in our example, what happened? The I think Rita or whatever the name was of this particular sommelier. So this person actually created that idea, came out with this particular blend, and launched two cafeterias as well, if you can recall, right? So the idea is actually implemented on ground, but I cannot accelerate it. There are a lot of challenges that I'm facing, so I'm not able to enhance, accelerate that idea. How to bring the profits, how to. So in those cases, I need somebody who is at an accelerator level. Once I'm able to do it, to set it up completely, have the profits around, now I want to expand it. So what I have done in Kolkata, I want to do in other states of India. And if I'm doing that, then I will need a startup or maybe a private equity or a venture capitalist, right? So they will come and then they will invest in my company and then I'll be able to expand it. So is it clear now?
Yes, sir.
Okay. Then Okay, I have a question from Sandeep as well. Good evening, sir. In MCQ, the entity is trying to sell for 400, which includes 10% margin. Then the effective price is worth 110% of the cost. Hence, our target should be 400 of 110. Okay, I think
So,
you're okay. So you are
mention that.
confused little bit on whether this 10% is required on cost or it is required on sales, right? So when the question is silent, you can assume in both ways, but then you need to write down your assumptions. What is more logical here that when the question is saying that you need 10%, then we are assuming this 10% is on the revenue. If I'm telling you 1 lakh rupees is the revenue and I'm earning 10%, then what will you do? Is it like on cost I'm earning 10% or 10% margin on revenue is there? Right? So if I'm telling you 1 lakh rupees is revenue and my margin is 10%, then it is by default that I'm earning 10,000 rupees. You will not say like, this 1 lakh rupees is after 10% of the cost. So you'll be doing 1 lakh divided by 110% to bring to the cost. Okay. So, I mean, this is more or less like about the assumption that we are having. My calculation analysis is valid if the same comes as a description questions. I need your guidance, sir. I hope Sandeep, you are clear. Don't do it 110% because then you are trying to make 10% profit on cost. While the question is saying that 400 is the selling price and 10% is being made. So when someone is saying 400 is a price and we are targeting to do 10%, it means they are trying to earn 10% on sales, not on cost. Sir, can you please give a guidance on how to write answers specifically related to the divisional transfer pricing methods in IBS? I think I have covered this as well in relation to the transfer pricing, whereby I took that example of cost plus markup, and I told you in the markup scenarios, generally transfer pricing comes and plays a very big role. And Deepakji will also cover on how to draft answers, even though I have told you, right? I mean, stepwise how to write the answers. In the paper, questions pertaining to DT and GST liabilities, which are asked for 14 marks and 10 marks, and the individual specific papers are asked for 5 marks. What is the logic, sir? It consumes too much time, ultimately not able to complete full questions in the IPS. I mean, I know. So when we know that there is a problem which we are going to face, we can definitely work around that problem. We can prepare ourselves because there is something, a kind of a known territory is there, known problems are there. So obviously, I will leave this particular question for Deepak ji if he would like to answer you. Like the structuring of questions are happening, or probably lower questions need bigger answers. That is something which is, I mean, if you as a student you are aware about this. So be ready mentally and technically as well for those kind of situations. Okay, I'm really happy. It was kind of you were asking questions. It was pretty interactive. So thanks a lot for everyone. Deepak ji, over to you again.
Thank you so much, sir.
Okay, I think there is another question. So, what is the right approach to save time in finding the required? Okay, Deepak ji will handle this. So, Deepak ji, another question is how they can save time in finding the right solution from so many books,
Okay.
right?
Students, first of all, there is a strategic approach to handle IBS case studies. Okay.
So,
Now
Deepak,
I will
I,
try
I'll
to.
I'll be leaving. Okay, Deepak ji.
Yes, sir.
Uh,
Yes, sir. You can leave, sir.
Thanks a lot, everyone. Thank you. It was nice connecting with you. Looking
Thank you
forward
so
to
much, sir.
meet again. Thanks, everyone. Bye bye.
Students, first of all, you have to scan the entire case study in one go. The initial reading is very, very important. It helps you to determine whether you are able to handle the concepts being tested in case study in a easy manner. Okay. Remember, you have to select 4 out of 5 case studies. So, identification of right case study is very, very important. A wrong selection of case study means killing of your time. while scanning go through both MCQs as well as descriptive portion, because it will give you a holistic approach about overall paper. Okay, it give you overall sense about the paper. After selecting the case study, you are most confident. Start carefully reading, and first of all read requirement part is very important area. This will help you to understand which specific portion the examiner wants you to address. The focus may be on your accounting standards, regulations, sections, even on strategic models. For example, again common example, suppose a question says to assess competitive environment. Assess means to assess competitive environment. Assess is level 2 verb. It means you have to apply. Please don't write dicto theory here, because they are saying assess. Assess is level 2 verb. Therefore, you have to apply the concept. And because question is saying to assess competitive environment, it means you have to apply the Porter's five forces model. Sometimes students write simple theory from module, just copying or pasting, but this won't work. You won't get any mark on this. You have to apply. Suppose if case study says there are limited number of suppliers, it gives you clear indication that bargaining power of supplier is high. You have to write this in your answer sheet. Okay, now make notes directly under each force. First of all, read requirement part, and you know there are 5 steps in Porter 5 forces. Note down all 5 forces on your answer sheet and try to correlate the text given in the case study with the concept behind, as I discussed with you just now. Okay, this is sketch making. It will help you while you will draft your final answer. Okay, now the question comes, how much to write? Suppose a question is having worth of 12 marks, although uh, normally they ask in examination about 5 marks question or 6 or 7 marks question, but I am giving you this example of 12 marks so that you can easily understand. Okay, if this question to assess competitive environment is having worth of 12 marks, it means you have to write 5 forces. 12 divided by 5, it means 2.4 marks. It means you have to write at least 2 or 3 points in every force. Okay, students, please note that marks are awarded for application and conceptual understanding, not for rote memorization. Simpling listing of threat, explaining of bargaining power, you won't get any mark. Okay, now students, it is important to understand that open book resources are helpful only if you have conceptual understanding. Without it, you may struggle to locate the correct module, find the relevant page, or apply the concept correctly. If you have good conceptual understanding, only then you can find the proper concept from the module, or you can apply the concept. If you have not understanding of the concept, then in that case open book resources won't work. This is the reason students fail to complete the exam on time, because when you are searching again and again, you are wasting your time. You can search easily and in effective manner only when you have good conceptual understanding. This exam is not about hunting a solution from the module. Sometimes students worried about group 1 subjects. Students, here there is one important tip. It is select 1 or 2 paper from group 1, like FR. This paper not only help in this IBS paper, but also it will help you after you will become CA. Additionally, reviewing previous examination questions is very important. For example, question relating to AFM portion. Okay, if a case study is having foreign operations, then surely you will get questions from either from FEMA or from AFM. Even you may also get question from custom duty indirect taxation. Think from this perspective. While selective case study is not recommended at all, but such type of awareness, such type of integrity, such a type of integration is highly recommended for this paper. Students, you may carry any type of module for this examination, but best module is which one, which is base of your preparation. You may create indexes, mind map, flow chart, but ultimately your conceptual understanding is very, very important. By following this approach, you can handle IBS case studies confidently, efficiently, and successfully, I am sure. Any other query, students, if you have? Otherwise, I am winding up this session. Thank you, students. Yes.
I have one doubt how to present the answers, especially with divisional transfer pricing questions, case study in IBS. So, how to approach those and draft the answers for divisional transfer pricing?
For this, please go ahead with the module questions from set B.
Okay.
If you have conceptual understanding, then you can easily crack divisional transfer pricing questions. At least do illustrations from the module.
Okay.
Try to solve each type of questions from divisional transfer pricing. There are some methods like transfer pricing based on cost, transfer pricing based on cost plus markup, transfer pricing based on opportunity cost, transfer pricing based on market value. Okay, even there is concept on goal congruence. Okay, please go ahead with the same. Do at least one illustration on each concept, so that You can build your conceptual understanding and you can handle any question in examination.
Okay, sir.
Any other? Okay. Students, thank you for being part today's session and asking such wonderful questions, and your active participation made the session even better. Wishing you all the best for your studies and exam. Once again, thank you for everyone making this session a great success, and thank you, Amit sir. Please winding up this session.